You're trying to buy a house.
Mm-hmm.
And not just any house. We're talking about a massive, sprawling estate. It's a bit cold, sure, but it's sitting on what is arguably the most strategic corner lot in the entire neighborhood.
You want this house?
You want this house badly, but there's a snag.
Right. The owner isn't selling.
Yeah.
They've told you no. They've told you no politely, and then, maybe a little more rudely.
Exactly. So most people at that point would just walk away, maybe look for a different property. But in this scenario, you don't.
Oh, no.
Instead, you look at the owner's friends. You look at the people they do business with. And you tell those 8 friends, I'm going to charge you a massive fee every single time you walk out of your own front doors.
And I'm going to keep raising that fee until that house is mine. It sounds like a plot from a mob movie. Or maybe like a really dark satire about HOA politics.
It does. But if you just swap the house for the world's largest island and you swap that fee for punitive international tariffs, well, you have exactly the situation the world woke up to on Monday morning.
Welcome to the Greenland Gambit.
I'm so glad you're here to help me parse this because the sources we have today are, well, chaotic feels like a bit of an understatement. We're looking at a collision of high finance, aggressive diplomacy, and
literal invasion plans.
Yeah.
It is a fascinating and, frankly, pretty alarming convergence.
So that's the mission for this deep dive, right? To really unpack the sudden market turmoil triggered by President Trump's renewed and, seriously intensified push to purchase Greenland.
And we aren't just talking about a few tweets here. This is much more.
No, we are not just riffing. We've got a serious stack of sources today. We're looking at breaking financial news about the futures markets from Monday the 19th. We have official statements from the president himself on social media.
Plus, and this is crucial for a story like this, we're looking outside the U.S. bubble. We've got reports from CCTV and the Global Times, leaks coming out of British media, and some really heavy quantitative analysis from financial think tanks.
Like the IDIC Securities Yang fan team. Yeah. So the big headline is simple enough on the surface. A proposed tariff on European nations who are blocking this sale. But the reaction, that's where it gets complicated. We're seeing historic highs for precious metals.
And a pretty nasty drop in tech futures. It really raises the big question. Can a real estate deal actually turn into a trade war and a potential military crisis overnight?
Looking at the red ink on the screen this morning, the answer seems to be a resounding yes.
It really does.
Okay, let's get into the weeds, because I think a lot of people hear Greenland and just think ice and polar bears, not global financial meltdown. Let's start with segment 1, the ultimatum. This isn't just, I want to buy Greenland anymore. This has teeth.
Oh, it has serious teeth. So early Monday, the president took to social media, and he didn't just complain about Denmark refusing to sell. He targeted 8 specific European countries.
8 of them.
8 nations that have been identified as the primary blockers or opposers of his plan to acquire Greenland.
Do we know which ones? Besides Denmark, obviously.
The list isn't fully public in the tweet itself. But based on some of the British leaks we're seeing, it's the heavy hitters, Germany, France, probably Sweden and Norway. And he's hitting them with numbers, not just words.
Right. An immediate 10% tariff. But 10%, we've seen tariffs before. Is that really enough to cause this level of panic?
Well, 10% is just the opener. That's the attention getter. The real threat, the stick, is the escalation. He explicitly threatened to increase that tariff to 25% in the coming months.
25%. Okay, now that's huge. That's not a correction. That is full-on trade war territory.
It is. But hold on, because the number isn't even the most interesting part. It's the condition that's attached to it.
What do you mean?
Usually when a president imposes tariffs, it's about a trade imbalance. You're dumping steel, so we're taxing steel, that kind of thing.
Right. It's economic tit for tat. You hit my farmers, I hit your cars.
Exactly. In this case, the condition for lifting these tariffs is explicit.
Yeah.
They will remain until an agreement is reached for the, quote, complete thorough purchase of Greenland.
Complete thorough purchase. That phrasing really jumps out.
It should. It's very specific. It implies he doesn't just want a base there. He doesn't want a long-term lease like, Guantanamo Bay or what the British had in Hong Kong.
He wants the deed. He wants
sovereignty.
Wow. It feels incredibly transactional. He's linking a territorial acquisition directly to the economic punishment of third-party allies. Is there any precedent for this?
In modern history, no. This is unique. It's the ultimate application of leverage. If you view geopolitics strictly as a business deal, which is the Trump doctrine, this is squeezing the stakeholders until they give in. It's the art of the deal on a geopolitical scale.
So the logic is basically, I will make it so painful and expensive for you to keep Greenland that selling it becomes the only rational financial choice?
Precisely. He's betting that the German auto industry and the French luxury goods sector will scream so loud about losing a quarter of their profits that they will force Denmark to the negotiating table.
It's a massive gamble. And judging by the charts, the markets did not like this gamble one bit. Let's move to segment 2, the market shockwave.
Shockwave is definitely the right word. This was a classic risk-off event.
Can you explain that term for listeners who might not trade stocks every day? We hear risk off and risk on a lot.
Sure. So in the market, you have risky assets, tech stocks, crypto, things that do well when the world is calm and growing. Then you have safe assets, gold, government bonds, cash. When investors get scared, they sell the risky stuff and they buy the safe stuff.
They take the risk off the table.
And that's exactly what we saw Monday morning. Instantly. Investors saw that headline, saw the threat of a 25% tariff hike, and they panicked.
We saw Nasdaq futures drop over 1%. S&P 500 futures fell, 0.71%? Now, 1% might not sound like a crash to some people, but for a futures market move before the opening bell, that is a lot of value getting wiped out before anyone's had their morning coffee.
It is significant, and tech stocks are just incredibly sensitive to global trade. But frankly, the stock drop is the boring part of this story.
I completely agree. The real story, the one that made me double-check my screen, is in the commodities.
This is where we see the fear index in real time.
I was looking at these numbers and I had to make sure I wasn't hallucinating the year. We are seeing historic highs.
Let's talk about that flight to safety. When investors are truly terrified, they buy gold. It's the oldest safe haven in the book.
And buy they did. Gold broke the $46.90 per ounce barrier. That's up over 2% in a single day. Nearly $4,700 an ounce.
And context is everything here. A few years ago, people thought $2,000 was the absolute ceiling, then $3,000. Seeing $4,700 tells us that institutional money, the big banks, the sovereign wealth funds, they aren't just betting on a dip. They are betting on a systemic shock.
But if gold is the fear gauge, then what on earth is silver doing? Because that chart just looked vertical.
Silver is the real headline for me. It broke $94 an ounce, up over 4% intraday. That is a new historical high.
So why is silver moving so much faster than gold? I thought it was kind of the poor man's gold.
It is, but silver is a hybrid. It's a precious metal, yes, so people buy it for safety. But it's also a crucial industrial metal. It's in solar panels, electronics, medical devices.
Oh.
When you see silver at $94, it means two things are happening at once. One, fear. Two, the market is trying to corner the physical supply because they're worried trade routes are about to shut down.
So $94 silver isn't just speculation. It's people thinking, I need to secure materials before the world stops trading.
Exactly. And it's not just metals. Look at bonds. U.S. 10-year and 30-year Treasury futures both rose by 5 points.
Which means yields are dropping, right? People are just parking cash in U.S. debt to keep it safe.
Yes. Even with the chaos coming from Washington, the U.S. Treasury is still the safest locker in a burning building.
So the market signal is stocks down because trade is threatened, gold is up because people are scared, and silver is skyrocketing because people are scared of a supply chain collapse.
That is a perfect summary. It's monetized fear. And that fear is compounded because the market knows this isn't a one-sided fight. Europe is not just going to take this.
Which brings us to segment 3, the geopolitical fallout. Because we have reports from CCTV that these 8 nations are planning a collective counterattack.
And that phrase collective counterattack is doing a lot of heavy lifting. It implies a coordinated response, likely reciprocal tariffs.
If the U.S. taxes German cars.
Germany taxes U.S. software. Or they target agricultural goods to hit the U.S. voter base. It's the standard playbook. But there's a very strange contradiction happening with Germany specifically.
Yeah, I saw this. It felt like a riddle. So the report says German troops were on Greenland?
For a few days. The report states they had been up on the island for only a few days, probably as part of a NATO exercise or a show of solidarity with Denmark.
And now?
Now they're withdrawing, evacuating, basically.
Okay, let me get this straight. The U.S. threatens tariffs. The Germans, who had just sent troops in, turn around and pull them out as soon as the heat is on. That looks like...
Oh, it looks like they're backing down.
One might see it that way. It certainly looks like a retreat. However, at the exact same time, the German vice chancellor came out and stated explicitly that Germany cannot be scared by the United States.
Wait. They withdraw their military, the ultimate show of strength, but then say, We aren't scared. That makes no sense. Why withdraw if you aren't intimidated?
That is the crucial question. And I think it's actually a de-escalation tactic disguised as confusion. How so?
Think about the risk. If U.S. forces create a perimeter or a blockade and German troops are there, you have the potential for a trigger event, an accidental shooting, a collision. That could trigger Article 5.
A war between NATO allies.
Exactly. So by withdrawing the troops, Germany avoids a direct kinetic confrontation. They are taking the guns off the table. But by saying we cannot be scared, they are signaling their resistance will be economic and political.
So they're saying, we won't fight you on the beaches, but we will fight you in the bond markets.
Which is probably the smarter play. But speaking of fighting on the beaches, this is where we have to talk about the elephant in the room.
Segment 4, the military escalation. Because while Germany is pulling out, we have reports that the U.S. was planning to go in.
This is the most explosive part of our source stack. If this is true, it changes everything.
We have a report from British media, which is picked up by the Global Times. It claims President Trump didn't just tweet about tariffs. He ordered the U.S. command to draft a plan to invade Greenland.
Let's just pause on that. An invasion plan, not a purchase agreement. A military operation to seize territory from a NATO ally.
It sounds insane, but doesn't the U.S. have contingency plans for everything? I mean, we probably have a plan to invade Canada somewhere.
Sure, the Pentagon has plans for zombie apocalypses, but in order to draft a specific plan in the middle of a diplomatic crisis, that is active. That isn't a dusty file in a basement. That is operational planning.
But there's a twist in this report that I found absolutely fascinating.
A massive twist. The report notes that this order was boycotted or effectively resisted by the military leadership itself.
So the commander-in-chief says, draw up plans to take the island, and the generals just say no.
That is what the leak suggests. Boycotted is a very strong word. It implies institutional friction. It suggests the generals stalled or pushed back or said, sir, this is illegal and impossible.
That's a constitutional crisis waiting to happen.
Right. But look at the bigger picture now. We have economic pressure from the tariffs. We have the threat of military pressure from these invasion plans.
It's a multi-front assault.
It demonstrates a strategy. He's pulling every lever. He threatens their economy. He threatens their sovereignty. And here's the cynical take. Even if the military resists, the leak of the plan serves its own purpose.
How? You mean just knowing the plan exists is a threat?
Exactly.
Yeah.
It tells Denmark and the EU, I am willing to go this far. It's the madman theory of international relations. If Europe thinks he's crazy enough to actually send in the Marines, maybe selling the island starts to look like the safer option.
It's pure intimidation.
It is coercive diplomacy.
Yeah.
And the fact that the military resisted is comforting in one sense, checks and balances, but terrifying in another, because it shows how close we are to that option being on the table.
It just highlights the chaos. So that leads us to the future. Where does this even go from here? Segment 5.
Right. We have this analysis from Shike Dao, which outlines 3 schemes for the U.S. to take Greenland. It's almost like a flowchart of options.
Scheme 1.
Diplomatic purchase. Write a check. The easiest way.
But Denmark already said no.
So scheme 2. Economic coercion. That's the tariffs we're seeing right now.
And scheme 3.
Military presence. The invasion or occupation.
And it seems like we're seeing a blend of all 3 at the same time.
That's the Greenland gambit. You don't just pick one path, you flood the zone. You make the status quo so expensive and so dangerous for Europe that selling becomes the only rational choice.
But the Societic Securities team raised the big question. How will the Greenland dispute evolve? It feels like the only certainty is uncertainty.
It's completely fluid. But let's synthesize what we know for you listening. We have economic warfare with the tariffs. We have military posturing with the invasion rumors and the German withdrawal. And we have a diplomatic standoff with Europe's collective pushback.
It's a 3-legged stool, but every leg is made of dynamite.
And the spark is the market reaction. If gold stays at 4,700 and tech stocks keep sliding, the pressure on all leaders, U.S. and European, to resolve this will become unbearable.
Why? Can't they just ride it out?
Not at these levels. The global economy cannot sustain a trade war of this magnitude over a real estate deal. Something has to break. Inflation will spike, supply chains will rot, the CEOs of the world will start screaming for a deal.
So let's wrap this up. What are the main takeaways for you listening right now?
First, this is real. It's not just political theater. The prices you're seeing, gold near 4,700, silver near 95, are a direct result of this clash. Your portfolio is voting on this outcome right now.
Second, understand the mechanic here. It's a trade war sparked by an ambition to redraw the map. Those 10 to 25% tariffs, that's not just a headline. That is the price of your car, your wine, your electronics. That's inflation coming for your wallet.
And third, the diplomatic rift is deep. The U.S. and Europe are allies. But this behavior-threatening invasion, imposing punitive tariffs, it strains that alliance to its breaking point. You have to wonder if it can even survive this kind of internal extortion.
It's easy to laugh at the idea of buying Greenland. It sounds like a meme.
Yeah.
But when you look at the silver price or you look at your 401k dropping, it stops being funny very, very fast.
It directly impacts you. The cost of goods, the stability of your investments, all of it is now tied to the fate of this icy island.
So I want to leave you with a final thought. We talked about the military resistance, the boycott of the invasion plan.
Yes. The one guardrail that seems to have held for now.
So here's the question. You have an unstoppable force meeting an immovable object. The political leadership wants this land. The military is refusing to be the tool to take it. And the market is screaming, stop, by crashing the economy.
It's a standoff.
So who actually blinks first? Does the buyer back down because the political cost gets too high?
Does the seller Europe sell the island just to save their economy from the tariffs?
Or do the soldiers eventually have to follow an order they disagree with?
The buyer, the seller, or the soldiers. Someone has to move.
And until they do, keep an eye on the price of gold. It's really the only scoreboard that matters right now.
Thanks for listening to The Deep Dive.
We'll be watching the tickers and the tweets, so you don't have to. Stay curious.